Hey everybody, Chuck Barone. It is Monday, August the 14th, 2023, and here we go on another week of friggin' crazy. Wow, things are off rocking and rolling. This is the most uncertain time I've seen in a long time, where it looked like the picture was getting a little clearer, but it isn't. Anyway, before I get rolling today, it's going to be a wild one. Let me welcome everybody to the show. And as always, thank you guys a million, billion, Brazilian times for your guys' support, especially you core guys who show up every day. We really appreciate you guys. As you guys keep us coming back and doing this every day, much appreciated. All right, so let's talk about these markets today. Today, not a lot of real news, so mostly the market kind of suffering from a pretty serious bout of indigestion from last week's friggin' fiasco. And now, it's interesting. We're going to talk about this a little later. There's so much conflicting information going back and forth from some of the smartest people, looking at the same thing and seeing completely different things. It's amazing to me. Very little consensus, just no certainty at all. And the truth of the matter is, if there's one thing Wall Street hates, it's uncertainty. So if uncertainty is going to be around for any real length of time, I'm telling you guys, expect these markets to start declining. The market wants to pretend like everything's great. We're going to have this amazing soft landing and everything's going to be perfect. Inflation's going perfect. Everything's going perfect. Okay, I guess if that's what you really want to believe and you really see it that way, good for you. Just a few little kind of chinks in the armor, though, and stuff we're going to talk about. So let's look at the markets today. Okay, so the markets had a happy day today. Everybody happy now with the soft landing scenario, believing that the Fed is pretty much done with their rate hikes. That seems to be the Wall Street consensus now, is that the Fed's going to pause in September. They're not going to raise rates again this year, and sometime next year, rate cuts are going to start. Okay, that seems to be where the market's setting up. Although the market had a little volatility today, the bond market did. We'll talk about, but Wall Street seeing this perfect Goldilocks scenario that just never ever happens. So today, happy day though. The Dow up 26 points, 35,307 on the Dow. The S&P up 25 points, 4,489 on the S&P. The NASDAQ up 143 points, 13,788 on the NASDAQ. So the market's having a happy day. Not giant, colossal gains, but kind of an up day is a good one. We'll take all the up days we can get, right, guys? Okay, so these bond market today, though, kind of a weird day with bonds, right? The 10-year sitting at just going up 1 basis point, hardly moving, 4.18% of the 10-year. The 2-year jumped 8 basis points, 4.97%. So now you're seeing the yield curve kind of shrinking up a little bit, right? 79 basis points. And the 2-year jumping tells me that the market's losing a little bit of faith in the fact that 2 years, that rates will be lower in 2 years. The bond market feeling that way, and maybe not the stock market so much. So, shorter term yields rising, longer term yields kind of sitting there. We know what happened last week with the U.S. Treasury and their auctions. It's going to be interesting this week. I didn't really see much information about what the Treasury is going to be auctioning off this week, but I'll go digging for that. We'll talk about that a little bit. But bond market having a weird day, shorter term yields spiking. Dollar today up again, just small though, sitting at 103.14 on the index, now breaking up past 103. The dollar's still the strongest out there. I guess maybe the dollar's seeing rates higher. I don't know. The dollar holding strong though, and not a lot of news really to support any kind of upward move in the dollar. I guess it's more of not anything we're doing right, is our competition as far as other world currencies doing more stuff wrong, I guess. I don't know. Metals today, because of this strong dollar, having a down day. Not big though. Gold down $5.70, sitting at 1,907.40 cents per ounce. Was just up over 2,000, so gold losing some steam. Silver down 8 cents, $22.58 per ounce for silver. So the market's giving back a little bit on metals with this strong dollar. I'm telling you though, guys, if prices continue down, it might be an opportunity to scoop up a little bit more, especially silver. I'm a fan of silver. I like it because you get, it seems like you get more for your money. I don't know. Maybe that's just the poor boy's way of thinking, But it's fun to have handfuls of stuff to play with rather than just one coin to look at, right? Anyway, so metals down, strong dollar. Oil today also down small, down 62 cents per barrel, $82.57 for a barrel of West Texas Intermediate. So it's still sitting strong, well above the trough it's been trading in for a while. Maybe losing a little bit of steam. We'll keep an eye this week. We'll give you guys more clues as we get them. Bitcoin today also down small, down $40, 29,361 for Bitcoin. I was reading some stuff. There's been a lot of news with Bitcoin coming. A lot of these bigger firms now want to get in on the action with Bitcoin. I think they're seeing another market that's unregulated to exploit. Be cautious, guys, but it looks like there's going to be some activity in the crypto sphere. Might be a chance for a little bit of an upswing to the upside. As we do every Monday, let's talk about data we're going to get this week. Today, quiet day, just earnings coming. I haven't really seen much of a report on anything yet, but quiet day today. But tomorrow we'll start it up. Tomorrow we'll get retail sales, which are expected to be up. We'll get business inventories, which are expected to basically be flat. The import price index, import prices expected to be higher. The Empire Manufacturing Index expected to be lower and pretty dramatically lower. On Wednesday, we'll get the Mortgage Bankers Index, which is expected to be down. We'll get building permits, which are expected to be up. Yay, real estate. We'll get capacity utilization, which is expected to be up. Housing starts also up, and industrial production also expected to be up. So negative day coming Tuesday likely, more positive economic data coming on Wednesday. Thursday we'll get our jobless claims, expected to come in at 238,000 this week. We'll see, they've been off a little bit lately. Last week was a little higher than that. I think it came in, 260 last week. So we'll see where unemployment's heading. Also, we'll get leading indicators, which are expected to be down, and the Philly Fed Index, Philly Fed Survey, which is also expected to be down pretty dramatically. And on Friday, we'll finish the week finally with some quiet time. Okay, I'm sure the market will be digesting everything over the course of the week. Now, maybe we'll get our PCE numbers. They don't really announce when they're going to be bringing those public. I think usually that happens on a Friday, so maybe we'll get those this week. So it's not going to be a big tumultuous week like it was last week, but we know heading into the end of the month and the end of this quarter, with September rolling, things are going to start getting a little friskier. All right, so let's talk about some stuff today, news you guys need. I was reading today, talking about conflicting information, right? A prudent person going to research, going to look for people who've been successful in the past. After a while of doing that, you start to learn to respect certain opinions. Certain companies are right more than they're wrong. Nobody obviously gets them all right. So now I'm looking at this today and I'm like, okay, check this out. So Goldman, which is a company I respect, maybe not so much for what they do as the amounts of money they make, they came out today saying they expect the Fed is done raising rates. They expect cuts to start in the second quarter of next year. As I was telling you, this seems to be the consensus now on Wall Street, this soft landing scenario. Now, Goldman, a company that does invest some money in research, they've been correct so far about how high rates would go, especially when everybody thought we were peaking out way sooner than we did. And when the market even the Fed was talking recession, Goldman said, hold on a minute, maybe not so fast. So they've been calling some stuff right, and they are seeing things, the soft landing scenario, which I have often compared to the landing of the Hindenburg. Okay, because I've never actually seen one happen. It seems to be more theory than reality, right? But anyway, Goldman's seeing this as their likely scenario. Okay? At the same time, another company I respect, especially for the amounts of money they make, BlackRock, coming out saying the recession is foretold. Okay? They expect the economy here in the U.S. to, these are quotes, flatline for another year. Then after about another year of this, higher rates and exhausted savings, especially people blowing through the pandemic money they managed to stash, will sink the economy into recession. Now they're calling for, get this guys, they're calling for full employment stagnation in the economy, where there's full employment in the economy, but the economy is stagnating, not really growing. Now, they're arguing that that pretty much has already been the scenario for a while now. They're saying that labor shortages will start to bind next year in 2024. Inflation will go on a roller coaster ride and finally reemerge full-blown. Well, that's quite a different view of things than Goldman, right? So when you look at this kind of stuff, what do you make of that? I mean, these are two highly respected firms that have some pretty glorious pasts and some big wins under their belt. Who's right? And which way would you bet your money? I think this proves a lot of the points we've been making on the show about the best strategy for the vast majority of investor/savers. Okay? Trying to get razzle-dazzly, trying to outsmart this market, trying to outsmart these kind of pros who could see the same exact thing so completely differently is a fool's errand, guys. You need to stick to the absolute basics we've been teaching since day one on this show. Save a certain portion of your income, every penny of your income. Stash a part of it. Pay yourself first. Try not to add on any new debt. And if you have existing debt, especially credit card debt, try to chip away at that as much as you can afford. A little at a time, even an extra $10 makes a difference over a minimum payment. Invest your money conservatively. Be careful with the way you're investing your money. The important thing, every investor, is to preserve the principal amount you're investing, not to try and chase colossal gains every single time. I mean, these are very basic things, right? And I tell you, spend your money prudently. Spend your money thoughtfully, right? Be aware of the impulse buys. Be aware of the stuff that was a want and now becomes a need, right? Hold your money tight. You'll be glad you did, guys. Living a debt-free life, or a debt-small life, or if you can get to be debt-free, it's really a freedom. You can't even imagine what it's like to be able to keep most of your income and not have it pre-spent before you even go to work to earn it. Anyway, guys, that's it for the day. It's going to be a fascinating week. We're going to be here to bring you guys all the details. Welcome back to Jake, our producer here, who's here to help with the videos today, making my life so much easier. And your guys' life a lot better, too. You'll be able to hear me today and probably won't spell my name wrong. Anyway, that's it for the day, guys. We really appreciate your support. If you like what you're hearing, please hit that like button. It changes the algorithms around, gets our video in front of a few more people. Hit me up in the comments. We'll be back tomorrow to bring you the news you need, guys. Till then, take care.